Welcome to this video on the top Fibonacci trading secrets. As a Forex trader, you are always on the lookout for new strategies and tools to help you make profitable trades. And if you are not using Fibonacci analysis in your trading, then you are missing out on one of the most powerful and effective tools. Fibonacci analysis is a mathematical approach to analyzing markets based on the golden ratio and the Fibonacci sequence. What is the Fibonacci sequence? The Fibonacci sequence is a series of numbers that follows a specific pattern. It starts with 0 and 1, and every subsequent number in the sequence is the sum of the two previous numbers. So the sequence goes 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, and so on. The Fibonacci sequence is named after the Italian mathematician Leonardo Fibonacci, who introduced the concept to Western mathematics in his book Liber Abaci in 1202. However, the sequence itself had been studied in India hundreds of years before Fibonacci's time. While the Fibonacci sequence might seem like an abstract mathematical concept, it actually has a wide range of applications in various fields. For instance, it can be used in stock market analysis to determine when to buy or sell stocks. It's used in cryptography, and it's also used in architecture and design. In fact, the spiral pattern created by the Fibonacci sequence can be seen in many natural phenomena such as the spiral pattern of a snail's shell, the arrangement of leaves on a stem, and the shape of a galaxy. Why is Fibonacci sequence so fascinating? One of the reasons why the Fibonacci sequence is so fascinating is that it appears in so many different areas of life, from the natural world to the financial markets. Fibonacci retracements. Fibonacci retracements are one of the most commonly used tools in Fibonacci analysis. They are used to identify potential levels of support and resistance in the market. The levels are drawn from the high to the low of a price move and are based on key Fibonacci ratios, which are 23.6%, 38.2%, 50%, 61.8%, and 100%. These levels can be used to identify potential entry and exit points for trades. The most commonly used ratios for Fibonacci retracements are 23.6%, 38.2%, 50%, 61.8%, and 100%. The 23.6% and 38.2% levels are considered shallow retracements and are used to identify potential areas of support or resistance during a price correction. The 50% level is considered a moderate retracement and is often used as a potential buy or sell signal. The 61.8% level is a deeper retracement and is used to identify stronger areas of support or resistance. Finally, the 100% level represents a complete retracement of the original price move and is often used to identify potential reversal points. Fibonacci retracements are a widely used tool for technical analysis in financial markets, as I have mentioned earlier on, and they are based on the mathematical concepts of the Fibonacci sequence and the golden ratio. To use Fibonacci retracements, traders first identify a price move that they believe is significant, such as a recent uptrend or downtrend. They then draw horizontal lines at key Fibonacci ratios that are calculated from the high to low of the price move. However, traders should always use Fibonacci retracements in conjunction with other technical indicators and risk management techniques to make informed trading decisions. The golden ratio. The golden ratio, also known as phi, is a key ratio in Fibonacci analysis. It is a mathematical constant that is approximately 1.618. The golden ratio can be found throughout nature and is believed to have aesthetic and mathematical significance. In trading, the golden ratio is used to identify potential levels of support and resistance in the market. It is a mathematical constant that is approximately equal to 1.618. The golden ratio can be found in various patterns and structures in nature, such as the spiral arrangement of sunflower seeds, the branching pattern of trees, the arrangement of leaves on a stem, and the proportion of human body parts. It is believed to have aesthetic and mathematical significance, and is often considered a symbol of beauty and harmony. In trading, The golden ratio is used as a key level of support and resistance. The golden ratio is often considered as the most important of these levels. Traders use the golden ratio to identify potential entry and exit points for trades, as well as to set stop-loss orders to limit potential losses. The golden ratio is often used in conjunction with other technical indicators, such as trend lines and moving averages, to confirm potential levels of support and resistance. For example, if a trend line intersects with a golden ratio level, this can provide a strong signal that the level is significant and may influence future price movements. The golden ratio can also be used to identify potential targets for price movement. Fibonacci expansions. Fibonacci expansions are used to identify potential price targets after a market has broken out of a range. They are drawn from the low to the high of a price move and are based on key Fibonacci ratios, which are 61.8%, 100%, 161.8%, 261.8%, and 423.6%. These levels can be used to identify potential profit targets for trades. Fibonacci clusters. Fibonacci clusters occur when multiple Fibonacci levels converge in a small price range. These clusters can act as strong levels of support or resistance and can be used to identify potential reversal points in the market. Fibonacci ratio in space and time. Fibonacci ratios can also be used to analyze time and space in the markets. For example, Fibonacci time zones are used to identify potential reversal points in the market based on time. Fibonacci price extensions are used to identify potential price targets based on distance. Fibonacci fan lines. Fibonacci fan lines are used to identify potential levels of support and resistance in the market. They are drawn from a high or low point and are based on key Fibonacci ratios, which are 38.2%, 50%, and 61.8%. These levels can be used to identify potential entry and exit points for trades. Combining Fibonacci analysis with other technical indicators. Fibonacci analysis can be used in combination with other technical indicators to improve trading performance. For example, traders may use Fibonacci retracements in conjunction with moving averages or trend lines to identify potential entry and exit points for trades. Fibonacci analysis can be a powerful tool in a trader's toolkit. By understanding these 7 Fibonacci trading secrets, you can improve your ability to identify potential entry and exit points, as well as potential levels of support and resistance in the market. Remember to always use proper risk management techniques and to test your trading strategies before committing real capital. Thank you for watching. If you found this content helpful, please consider subscribing to our channel for more insightful videos like this one, and join our community of informed traders.